The big question about U.S. markets is, are we in for another correction or are we still in a bull market? Let's get some perspective now from Mike Jones. He's the chairman and chief investment officer at Riverfront Investment Group, and he joins us now from Richmond, Virginia. Good morning. Thank you for joining us, sir. So it looks
My pleasure, Margaret.
It looks like, especially from today, that the euro has been leading stocks. When euro-dollar came down, we saw stocks give back a lot of their gains. Is that a fair assessment to make, that euro is leading the way we look at some of the other asset classes?
No, without question, because from our perspective, one of the motivations for this correction we've been suffering through the last several weeks is the question of financial stability in the global system. And that's all about Europe and how do they address both the liquidity and the solvency aspects of their crisis. And every time you hear someone like Krugman come up with a fairly definitive assessment that they haven't yet gotten out ahead of this crisis, you see downside to the Europe and you see question marks in terms of the global stock markets.
And that's caused the U.S. stock market to kind of trade in this range. I know in your notes you talked about the 200-day moving average as kind of this point of resistance for stocks right now. What's going to allow us to break out of that range? Could it be something from China, for instance?
Well, I think we've got two things that we've got to address for us to break out. We've kind of defined a decision box. Call it about 1040, the February lows on the S&P 500 on the downside, and call it maybe 1150 to maybe 1200 on the upside. And we think we're going to be stuck in that decision box, and we're right about in the middle of it right now, right at the 200-day moving average. To significantly break up and out, we got to get assurance on, one, will China policymakers go too far in trying to cool down their property markets and possibly endanger that Chinese consumption machine that's the only real engine of global growth right now? That's question number one. Question number two is what will Europe do about their whole debt crisis? We think question number one gets answered resoundingly to the positive for the markets. You're already seeing important policy changes coming out of China. For example, people are all focused on the yuan and whether they're going to revalue. That's one way you can address global imbalances through China. A more powerful way is to allow Chinese wages to rise. Look what's happened with the Honda strike, 25% wage increases. Foxconn, 30% wage increases, double-digit increases all across the manufacturing heartland of China.
Mike,
that will keep powering consumption.
Let me just ask you very quickly, given that's the case, how do you invest in this kind of market? What kind of U.S. companies do you focus on then? Very quickly here.
Well, if you're in a decision box, then you don't have to worry about quality stocks being left behind the way they were in January and March and April. So we think now is the time to start pulling the trigger on some of those upgrades in portfolio quality that weren't working early on in the year. We've been executing that in our portfolios by selling some of the high-yield ETFs that have been underperforming and going into more high-quality things like PFM.
Okay.
The other thing we've been doing in our individual...
Thank you very much. I'm sorry to kind of cut you off there. We've been speaking with Mike Jones, Chairman and Chief Investment Officer at Riverfront Investment.